Something else that I will also point out here with the triple Qs is you have a long-term cup and handle formation. It's pretty easy to see once you actually scroll out. You have the cup, you have the handle, and now you're getting the breakout to the upside. You really, I mean, you can't make this up. I've never seen a cup and handle formation that looks this obvious. Rivian and Lucid earnings are out. It's affecting Tesla stock a wee bit here in after hours. We need to talk about it because I did make a trade on Tesla today. I do think Tesla tactically is probably going higher from here as some of the fears have subsided as the technicals continue to hold up throughout the day today. There is a big catalyst coming on Thursday. Wall Street is really not pricing in at all that here in the short term could be exciting, and we just had the 7th green day in a row. This has not happened since 2003, and that was the only other time that has ever happened for our markets. That could be a sign of good things to come as long as Fed Jerome Powell tomorrow does not spoil the party. But if I were to do some technical analysis on the NASDAQ, for an example, the NASDAQ is telling us we could see a breakout much higher from here. So unfortunately for the bears, the bulls are winning and the bulls are about to potentially trample over the bears in waves. We have all of this information for you and much more, including Tesla's option activity here on the day today. Let's go ahead and get into all of this information. Hit that like button and subscribe to the channel because it's free 99. If you guys want to take it a step further and come trade with us live in real time, link down below in the description of this video. First up, take a look at the losses that Rivian, Lucid, and Ford have posted for Q3. Today in after hours, you had Lucid and Rivian report earnings, but we already know Ford lost about $36,000 per EV vehicle that they sell. Rivian only is losing about $30,600, so about $5,400 less per vehicle than even Ford. Rivian, I'm starting to like it more and more by the day. The valuation, unfortunately, is too high for a company that will have to continue to dilute shareholders. I'm not touching Rivian right now. If the markets crash, that'll be another story, and I'll let you guys know if I look to make a position in that one. But Lucid, holy guacamole, the loss continues to grow. For every Lucid vehicle that was sold, Lucid had a loss of $433,000 per vehicle. That is astronomically high. That is ridiculous. Makes you wonder how much of the actual compensation is making its way to the executives, because Peter Rawlinson and some of the top executives are the only ones that are making money when it comes down to Lucid. Tesla is putting these guys in a really bad position. Even something like a Rivian that has an average selling price of around $90,000, if the Cybertruck comes in and undercuts that, which it looks likely it will, even Rivian could be in for a world of trouble, but Lucid is already feeling that pain. After all, these are just the numbers that we actually get reported from the automakers. Not a lot of companies actually report the loss per EV vehicle. Just really these three. Lucid did as well just cut their production guidance for 2023 by about 20% from 10,000 vehicles for the full year down to in between 8,000 and 8,500. EPS came in at negative 28 cents versus negative 36 cents as the estimate, so they actually beat on their EPS. Revenue came in at 137 million versus the 177 million estimate, down 30% year over year. That is a brutal number. For context, Tesla grew their revenue year over year by about 9%, even after cutting prices big time in the last year. That's insane. Net Q3 loss, $631 million, up 19% year over year. The harsh reality is Lucid Motors, unfortunately, is not going to make it. At least in my opinion, that's not financial advice, but that loss is just incredible. Rivian, on the other hand, is increasing their full year production guidance to 54,000 from 50,000. EPS came in at negative $1.19 versus negative $1.32 for the estimate. Revenue at $1.34 billion versus $1.31 billion for the estimate. Gross profit negative $477 million versus negative $917 million in Q3 2022. Operating expenses $963 million. Net loss $1.37 billion. And they do have $9.13 billion cash on hand, down 34% year over year. So some of these numbers, like the net loss, could have been a little bit better. I mean, you're going to run out of cash here in the next 2 years or so at this pace. That is if things did not improve, but odds are they will improve, and odds are Rivian will actually survive to see a mass production scale, really get to full scale. Rivian basically beat the estimates across all of these different metrics. That's why Rivian is up in after hours by about 3.5%, and Lucid is down almost 5%. Completely different earnings results from these two companies. Let's now switch gears and go over everything you need to know about Tesla stock. And again, to the point I made in the intro, the bulls are winning here, and it's obvious to see. I think it's likely the bulls will continue to win over the next coming weeks. The first thing we need to start with is the chart here. Now, Tesla stock, as you know, hit that low about $194 per share or so in these 2-day trading periods in between October 30th and October 31st. Since then, Tesla stock has bounced. You found resistance at the 200-day moving average on November 2nd, and now for the last 3 trading days, you have held the 200-day moving average, or very close to it, into the end of the trading day. These wicks, as you can see right here, are telling you the lows of these 2 trading days. You've been touching lows around 215, 216 or so for the last 2 days. What you'll notice is the low today was slightly higher than the low yesterday. So that's a good sign that the bulls are starting to take over. They're starting to get the win here. Essentially, when you start to make higher lows, that tends to be a good thing. At the same time you're holding your 200-day moving average, that's really primed for a breakout to the upside. And I think we'll know by tomorrow, because we have some big catalyst coming tomorrow. And really, it's Fed Jerome Powell. He's going to either confirm this rally and send this rally much higher, or he's not going to. As you can see from the economic calendar, we really don't have much data this week. The only real data that we're going to get that markets pay very close attention to is the Michigan Consumer Sentiment Survey on Friday. But this week is full of Fed speakers. Tomorrow alone, you have Fed Jerome Powell at 10:15 a.m. Now, any random Fed speaker, Fed Barr, Fed Jefferson, Fed Williams, Fed Cook, Fed Bostic, Fed, all of these other guys, they don't matter compared to Jerome Powell. Jerome Powell is the guy that has to be very careful on what he says, because it gives the markets deliberate messages about Fed policy. So Powell's going to speak tomorrow at 10:15. It's unclear if he is going to say anything regarding Fed policy or the economy coming during his opening remarks or questions. We just don't know what it's going to look like or sound like tomorrow from Fed Jerome Powell. We just don't know. Now, we're also going to get wholesale inventories at 11 o'clock in the morning. This is not going to move the markets as much. I don't think, but it will affect your GDP estimates. And we'll look at that here in just a second. But besides that, you have a 10-year bond auction. That will be important at 2 p.m. You have Fed Williams at 2:40, Fed Barr at 3 p.m., Fed Jefferson at 5:45 p.m. But I think it's pretty clear the markets are going to react to whatever message Fed Jerome Powell sends us. And these other Fed speakers, well, they're really not going to matter tomorrow. So good news is by 10:15 tomorrow morning, you're going to know where the markets are going from here. Now, me personally, I did make a trade on Tesla for the expiration of November 24th. I'm not going to give that exact trade because there's, issues with that. I'm not a financial advisor. I'm not a financial planner. Come to your own conclusions. Do your own due diligence. I'm not a financial advisor. You will lose money if you listen to what I say I'm doing. Okay, I'm doing it for a specific reason. And I provide my analysis in the trading group link down below in the description of this video, but we just can't go through that whole analysis. So it makes even less sense to go over that trade here in this video. But nonetheless, I did go bullish on Tesla stock expiring November 24th. Do I think it's going to hit? Maybe. It really comes down to Fed Jerome Powell tomorrow. What I will tell you though, if you look at the QQQ, this is incredible. This is way stronger than what you're seeing on Tesla. So essentially part of my theory over the next couple of weeks, tomorrow I guess, but the preceding couple of weeks after that, if Fed Jerome Powell does confirm this rally, in which I think this breakout, this technical breakout you're seeing in the NASDAQ, breaking above this longer term downtrending line ever since August or September, July technically, is telling you that he's probably going to confirm the rally. At least that's what the markets are saying here. And I do think as long as Fed Jerome Powell does not cause the markets to fall and he more or less confirms this market rally tomorrow, Tesla stock could have some catching up to do to the NASDAQ on that upside move. What I pretty much mean by that is the UAW fears have really put a damper on what I think Tesla would have otherwise done if that was not a factor. Really, over the last couple of days, you've seen Tesla do a kind of a whole lot of nothing, right? Sure, you have bounced from 194 or so, but it's really not that aggressive. It's really not that big in Tesla standard, Tesla terms. And I think that's just because we have a cloud of uncertainty around the UAW situation. That seems like it is coming to pass. Tesla raised wages for their employees. It doesn't look like anyone is unionizing to strike against Tesla. So I think that situation, those fears are at least going to die down in the near term. That could also explain some of the bullishness you've seen in Tesla for really the second half of the trading day. It's almost like exactly halfway through the trading day, Tesla stock got a lot more bullish kind of out of nowhere, right? You could see this was pretty dang bullish. You basically went straight up. Besides this period right here from like 130 to, or really like 230-ish to like 330. You went down during this time. Other than that, you basically went up from the second half of the day. Whereas over here, you kind of traded sideways. Overall, today was an uptrend from the lows, and that's obviously great. That's again, showing the bulls are taking control. We're finding a lot of good demand around that 200-day moving average, but I think Tesla has some catching up to do on the upside. Now, there are some rumors that we believe are now confirmed that Tesla is indeed going to raise prices for the Model Y and the Model 3 in China on Thursday. That's not tomorrow, that's the day after. You know how Wall Street is with these things. We get the rumors, the news before it actually happens. We can interpret what that means. And then once the news comes out, Wall Street looks at it as something they had no idea was coming. And I think that's another thing that people have no idea that it's coming on Wall Street. If you were to ask Gary Black or Dan Ives, probably more specifically, Adam Jonas even maybe, What's happening on Thursday? I would bet money 2 out of 3 of them would not have any idea that Tesla's about to raise prices on the Model Y. That they just don't know these things that we know. They don't stay up to date with Tesla the way that we do. So I'm just forwardly positioning into that and giving my analysis based on what I expect Tesla stock to do from that event and from a overall more bullish market. After all, 10-year treasury yields dropped over 10 basis points today. You're now sitting at some of the same lows that you've seen on November 3rd, and Tesla stock really didn't see a big breakout. 10-year treasury yields dropping 10 basis points on any normal day for Tesla, or any period of more normalcy for Tesla, you probably would have seen a 3 to 4% rally with Tesla. You were up 1.3%. It was an okay day. It wasn't a spectacular day in which I would expect it to have been. If you take a look at Tesla's option activity, today you had 615 orders totaling $945.71 million with a positive order value of 40%. I do think the option activity over the past 2 days has been a little bit muted compared to what we've been used to, with less than $1 billion. For a while there, for the last 2 weeks or so, every single day was in between $4 billion and $1 billion worth of options trading hands. Like every single day, which was, I mean, not too common, right? That's a lot of money flowing into Tesla options. But now you're back to a more normal level, less than $1 billion for the past 2 days. I think that is somewhat helping to explain a little bit of the lack of volatility over the last couple of days. You have really just seen the bulls and bears fighting here. Tesla stock has moved a lot from 215 to 226 on some days over the past 3 days, but it's still trading at the same price as it was on November 3rd. The last 3 days, Tesla has done nothing, whereas if you look at the last 3 days for the NASDAQ was up 1.17%, was up 0.41%, and today was up almost 1%. So the NASDAQs went up, what, almost 3% in the past 3 days, 2.5, 2.6%, and Tesla has done nothing. And if we look at Tesla's option activity, and we're using the bubble chart here to really get a feel of where we're seeing activity. So the 220 call had almost 110,000 for volume today with open interest of 20,000. Anytime, whether it's puts or calls, you see volume that is like this case, 5 times higher than open interest, that's usually a good sign people are getting into positions. That's more bullishly leaning than rather than not. Okay, there's a lot of activity on these strikes for this week. Even the 240 call, seeing about 17,000 for volume today with open interest of 18,000. The 230 call had volume of about 94,000 with open interest of 38,000. Another strong one, and this one was also really strong. The 225 call with volume of 106,000 and open interest of 49,000. So some pretty impressive numbers that you're seeing here, and these expire by this Friday. So some of these guys are obviously trading, but if you're looking at open interest numbers of 30 to 50,000 for these any given strike here, expiring in 2 days, 3 days, that's pretty dang bullish. And as you can see here, this is the PCR, the put to call ratio, OI. Open interest. So this is the next 1,000 days out. So this is taking you well into like 2025, right? Even 2026. It basically incorporates the entire option chain. So you have a put to call ratio that is almost equivalent for one call to one put. The put to call ratio volume today was 0.78. So that is a lot better than 0.92. The lower, the better when it comes down to the put to call ratio. And if you're looking at the call side, you had volume today of 56.25% to the call side and about 43.74% to the put side. So all across the board, it looks like the bulls are even winning in the options market. And here we have this interesting stat from FX Evolution over here on X. He says in the last 40 years, the S&P 500 has experienced only 2 instances of a 7-day continuous rise after hitting a 100-day low. The first signal took place on March 20th, 2003, signifying the conclusion of a bear market. The most recent event happened today. This is the NASDAQ 100, and from the start of 2003 to the end of the year, you ended up rallying about 68% from the low to the high of that year. The last time you've seen 7 consecutive green days in a row following hitting a new 100-day low. So the historical performance of this, well, it's only happened once, and it was a very positive return over the next 12 months. Something else that I will also point out here with the triple Qs is you have a long-term cup and handle formation. It's pretty easy to see once you actually scroll out. You have the cup, you have the handle, and now you're getting the breakout to the upside. I mean, after all, just look at the chart compared to a typical cup and handle formation. It's like literally identical, okay? I mean, look. You really, I mean, you can't make this up. I've never seen a cup and handle formation that looks this obvious. Although it's one of those things where you never know how hard you're going to run, but when it does get confirmed, like you've seen today, breaking above what this line would represent here, you tend to rally quite a bit after. So I would not bet against the markets right here. I do not have a single put position on my portfolio. I do just want to stack a lot of money right now, save as much as possible, and get ready for the ultimate recession, because if we do see a recession, stocks will go lower. But in the near term, it's going to be very hard to get stocks to fall here. You're going to have to see a bad inflation report. You're going to have to see that or Fed Jerome Powell be out of the blue just very hawkish tomorrow. Other than that, I mean, you'd have to be counting on like a black swan event. And I'm just not willing to do that. So if we do see some blow off top rally like the long-term chart of the QQQ suggest, being that it is a perfect cup and handle formation, well, I think you could make the argument that Tesla stock is also going to go much higher from here. Currently, futures overnight are pretty flat across the board. The Nasdaq's down 0.01%, S&P's up 0.01%, Dow's up 0.01%. Oil is dropping about 1%. That is probably the best sign of a dovish Fed coming tomorrow that we have as of right now. Credit card debt spiked in the third quarter to a $1.08 trillion record. And after all, this does explain the GDP report that we just got. Take a look at this, though. From 2019 of Q4, you had $927 billion of credit card debt. By 2021, that fell to $770 billion. And now you're back well over $1 trillion. $1.08 trillion. A fun fact, though, a lot of people in 2019, in Q4, thought that America was going into a recession at this time. Which, I mean, the Rona happened, you know, the economy, we were seeing rate cuts at this point, right? Back in 2019, you had 3 rate cuts towards the end of the year. The yield curve inverted, the Fed started cutting rates, heading into the Rona, then they dropped rates to 0. So we're at another one of those moments. This could actually be something that the Fed is pretty worried about, to be honest, because if you start to see unemployment rise, that's where you have the problem. I get asked a lot in my personal life, the few individuals that talk to me about stocks or finance or are interested in that, or in comment section or Discord chats, the trading community, I get asked all the time, when are the defaults going to start? When is the maybe foreclosure wave going to start? Or when are you really going to see the delinquencies on auto loans turn into repossessions and problems for companies? When people lose their jobs. It's as simple as that. If people start to lose their jobs, what's going to happen to this credit card debt? It's going to be a big problem for Capital One, for Discover, for banks that are the ones that let people get all of this debt. Then you're going to have an even bigger problem for the economy. And then you could see a snowball effect just because the unemployment rate starts to rise. So I think the Fed is looking at this now and saying, hey, it makes no sense to be extra hawkish now when we're seeing things like this happening. And now a problem's going to be much bigger. It was easy for the Fed to raise rates back in 2022 when credit card debt, was $841 billion. It was $100 billion less than pre-pandemic levels. Now you can't say that. So I think this is actually something that is having an effect on Fed policy currently. This goes on to say that a majority of this debt are from individuals between the ages of 30 and 39 and who are burdened by high levels of student loan debt, with most people feeling strained by higher prices, particularly for food, gas, and housing. More cardholders are carrying debt from month to month or falling behind on payments, and a greater percentage of balances are going more than 180 days delinquent, according to a separate report from the Consumer Financial Protection Bureau. Forget your government data. The Fed's looking at that and saying, well, that's not good. That's a problem. Something's missing in the government data, and people are really struggling out there. Fed Jerome Powell, remember this. Fed Jerome Powell does not want a recession legacy. They were too late to start raising rates. They were too late to start cutting rates, or even jawbone that they were going to be looser on policy. Markets today react before the Fed ever does anything. So the Fed's trying to condition the markets for rate cuts to come. Especially during an election year, it's very unpopular to be in a recession during an election year. Whoever the incumbent president is facing almost always will win if you're in a recession. People vote on their pocketbooks. They don't vote on the best policy. Tomorrow is going to be a pretty big day for earnings as well. Tomorrow pre-market, you're going to have Roblox, Fisker, Warner Bros, Nuvei, Village Farms, Under Armour, Biogen, Akebia, Semantics, and 3D Systems. Tomorrow in after hours, you have AMC, Walt Disney, Twilio, Marathon Digital, Affirm, Duolingo, HubSpot, IONQ, Digital Turbine, and Virgin Galactic. I didn't find anything attractive when I was looking at the option premiums. Nothing really stuck out to me personally, so I don't have any trades on these. But companies like Roblox or Walt Disney or Twilio or Affirm, Warner Bros, they can affect their different sectors. Again, Roblox, think gaming, think the state of the economy, more or less. People are not going to splurge on Roblox. What are they, like? I don't even know what they're called, to buy their kids Roblox dollars or whatever if they don't have the money to pay their bills. Fisker, I mean, we just got Rivian and Lucid, so I don't think that's going to move all too much. Warner Bros, think of Netflix, think even a Disney, think other streamers, cable companies, things of that nature. Affirm, credit, we want to see, are they taking more losses? Walt Disney, that's again consumer. Disney, Walt Disney experiences, I mean, those are privileges. More or less. Those are not things you have to do. So we want to watch those numbers. Twilio, same thing there. Software. How are enterprise customers feeling? Are they buying Twilio products? Getting into more software? Marathon, they're probably just going to have really good earnings because they're a crypto miner. So watch the sectors more or less, these earnings are not going to affect the broader markets. Back to the charts on Tesla, the RSI is at 46.05. Another reason why I think Tesla can move quite a bit higher from here without seeing some rejection, as long as you can overtake the bears that are left in this, $220 to $225 range. Seeing a close above 226 is what I would want to see for that move higher to ultimately where I think Tesla stock can go in the near term, to around 245, even as high as maybe 260 if the markets really do start to take off. If you were to connect this downtrending line that I had on there, my cursor must have messed it up at some point, but basically connecting this, I mean, you're gonna find yourself right here at about $250 or so over the next 2 weeks, and that could be where you find some resistance as well, which is basically in the middle of what I think Tesla stock can do from here. So these are only my opinions. Let me know what you guys think down below in the comment section. Hit the like button, subscribe to the channel. Thank you guys for watching. Again, if you guys want to come trade with us, link down below in the description of this video. My name is Michael Tyler. Enjoy the rest of your day and night, and I will see you in the next one.